Today is Wednesday, April 24th, and we want to talk about what's going on in the portfolio, give you a little fund update, and we're going to talk about exactly what's happening with Bitcoin halving. So each and every call that we have, we talk about a certain theme. Today's theme is going to simply be Bitcoin halving. This event just took place a few days ago on April 20th, and it's the reward that one gets for mining one Bitcoin, okay? But we're going to get more into it, okay? So current themes, like I said, Bitcoin halving, summary of what's going on in the portfolio, and what we're looking for in the next few weeks. We know the seasonality is coming to an end very soon here. May 5th. We're right around the corner. The markets have had a really, really good run-up since October 27th, although the last few weeks have been pretty rough. In fact, last week, the NASDAQ was down around 7%. That's a really, really nasty decline. So we've had a really big decline. However, we've had a nice run up since October 27th, okay? So we're going to talk a little bit about what we're doing going forward. So let's talk about Bitcoin halving, all right? So what exactly does that mean? Well, what that means is simply is this. If one were to set up a bunch of computers and mine Bitcoin, okay? That's the plan. For every Bitcoin that is mined, okay, every so often, because there's a finite quantity of 21 million Bitcoin, every roughly 4 years, the reward for each one of those mining processes, which means completing the blockchain, they turn into half. So you're roughly your reward goes to half, okay? Now, again, keep in mind, why are we buying Bitcoin? The reason we're buying Bitcoin is simple. In an environment right now where you have unadulterated and unfiltered printing of money, which is exactly what's happening. Well, you have an infinite quantity of money that you are able to print and to keep growing. How is that a problem? Well, if you can print up as much of something as you possibly want, well, there's no limitation on how you can devalue the current holders of that particular asset category. Bitcoin is a bit different. There are only going to be 21 million Bitcoin ever made, ever. Okay? And Bitcoin's real point of existence, in my opinion, is you are going to have a commodity or whatever you want to call it that has a finite quantity. It is a really, really good replacement for something like, let's say, a gold, okay? So it is a store of value. It is a transfer of value. And it can never go beyond 21 million. So in an environment where all these different countries around the world are printing up as much money as they can, and we saw this during COVID, you have one asset category that is trying to replicate that and is a limited quantity, okay? So Bitcoin's code dictates that the reward for miners is reduced every 200,000 blocks, 210,000 blocks, okay? It takes place roughly every 4 years. It happened in July of 16, then May of 2020, and it just happened 4 days ago on April 20th of this year, okay? It means the price should increase because the demand would remain static. Now, if the demand goes up even further, you got a good problem on your hands. Previous to this Bitcoin halving, for every blockchain that you were to mine, which essentially means, you know, the compute power that you use to create the next blockchain, you were rewarded roughly 6.25 Bitcoin for doing that work, okay, for completing the blockchain. That has now dropped to 3.125, so 3 1/8. 3 1/8. So you are way lower than you were before, okay? Implications are the mining will remain profitable, but most people will have to change the way they do things, okay? So let's take a look at what Bitcoin pricing did after the halving process. And this is pretty interesting. So if you look at 30 days before, 30 days after, and more importantly, about 180 days after. And here's the real reason why, okay? Again, you have 21 million Bitcoin ever going to be produced, ever. Nothing more than that will ever be produced. And you have all these different people around the world who want to buy this commodity, right? So you've got a lot of people who say, you know, I want to own some Bitcoin just in case. And the reason, like I said, the real reason for us to own Bitcoin is there is money printing going on that is unprecedented around the world, which is devaluing the current value of any existing currency, whether that be the US dollar, the Canadian dollar, etc. And here you have a finite quantity where it's a great medium of transaction. It'll never be produced more than 21 million. And there's a blockchain behind it. Meaning the blockchain behind it means this. You have an intricate web of transactions which is noted on the blockchain. So it's a really interesting place to be. So let's take a look. 2012, okay? 180 days afterwards, you can see it was the day after, it was $12.45. 180 days afterwards, $126, okay? 2016, 651 days, $651, excuse me, the day after, and $1,003 almost 180 days after. So a very, very nice increase again, right? 2020, $8,800, $14,849, 180 days afterwards. So what we're trying to show you is that it seems that after the day of Bitcoin mining, why? And it's a simple supply and demand equation. You have a lot of people who want Bitcoin, and the thing is, this might even be more profound this time around. You have a lot of people who want to own Bitcoin, but there's only 21 million ever going to be produced. If you have a smaller quantity, and you have the same amount of people who want to own it, that puts a lot of pricing pressure on the value of a Bitcoin, okay? And again, the reason why Bitcoin is such a big deal is because governments around the world continue to produce or print vast quantities of their currency. Those vast quantities of currency are only going to be valid for so long. At some point in time, people are going to say, like, you know what? You can just keep printing more and more of this. You can keep devaluing me. But if I own Bitcoin, you can't devalue me. So again, medium of transaction, store of value. Very, very similar to the gold of the, of the years past. So we can see that Bitcoin has done extremely well about 180 days after. So we've continued to purchase as much as we can right now, okay? The most explosive gains are post-halving. As you can see on average here, you get about a 427% increase, at least historically, okay? So this is counting the last three, 2012, 2016, 2020. I don't think it'll be anywhere near as high as 427% this time around, because you are getting closer and closer and closer to that $21 million number. Now, that $21 million number won't really be hit till 2140, long before everyone's gone, okay? Long after everyone's gone, right? Unless there are some technological changes which allow us to live much, much longer, but that's the reality of the situation. 427%, huge, huge increase, okay? Again, like I said, I don't think it'll be anywhere near as profound this time. There are a lot of companies and institutions that want Bitcoin, but we also have slightly more supply of Bitcoin, okay? Now, I will say this about Bitcoin. If, for example, you have companies that hold, and most companies, let's take, for example, a Microsoft or an Apple or whatever, or Tesla, they have a lot of cash on hand. Well, they have a couple of choices. They can hold cash or they can hold some Bitcoin. If you get to the point where companies are holding Bitcoin as cash and cash equivalents because it is a finite quantity, which is recognized around the world, that can only have so much supply, that would be a major impetus to demand. You have a finite amount of supply and an insatiable amount of demand. So as more and more people want to hold this particular commodity or asset class, you have upward pricing pressure. So we'll see what happens here, but this is what has happened historically, okay? Like I said, it's gone from 6.25 down to 3.125. You could expect this to continue as more and more companies, more and more institutions become aware of Bitcoin. Historically, the hash rate, this is the computational power dedicated to mining and processing transactions, dips after having as unprofitable miners disconnect. What this means is there's a lot of compute power required to mine a Bitcoin, a lot of energy also required. Okay. So if you were an unprofitable miner, you're not going to survive. You're not going to be in business. You're not going to be around. Why? Because you simply cannot mine that transaction in an efficient manner. 3.125 Bitcoins would be your reward. Okay, so at the current valuation of 3.125 times $70,000 or $65,000 roughly per Bitcoin, you're looking at about $200,000. Okay. Well, if you cannot mine that Bitcoin for $200,000, which means the amount of money that you put into your infrastructure, the amount of time that's required, the amount of energy that is required, there's no point in you staying in business. And that's exactly what's happening. So you want to make sure that these Bitcoin miners that you're involved with, if you're investing in one of these companies, are able to remain profitable. If the price increase outpaces the reward, and this has been the case year after year, mining can still remain profitable, but the basic line is the companies that are mining have to become more and more efficient. So what you'll have is you'll have a bunch of miners who will no longer exist because their operations are not profitable. Okay. The halving incentivized miners to invest more into equipment to stay competitive. This goes into our other themes. Well, how exactly does one mine Bitcoin? Well, what do you need? You need chips. You need energy, right? So what do you need exactly chips? You need NVIDIA chips, AMD chips. Who's producing those? TSM. These chips are going to be higher and higher in demand, and that's how it works, okay? So let's take a look at Bitcoin's halving timeline, okay? Just before halving, you can see there's a bit of a dip and then it kind of levels out. But the main thing to note is about 6 months out after Bitcoin halving, that's where the real benefit comes into place. It really accelerates about 365 days or 180 days outwards. And again, I really want to point to this one thing again, guys. If countries around the world are producing and printing money left, right, and center, which they are currently, you have no control over supply. They are printing money left, right, and center. This is the whole reason we have inflation. You print, you print, you print, and you print. Well, what is the combat to that? What exactly do I do if my government just keeps printing money and keeps devaluing my currency? It's happened in many other countries before. My default to that is owning a little bit of Bitcoin. Now, Bitcoin is not without any issue whatsoever. There could potentially be issues about Bitcoin. Could you have a competing technology that arises? Perhaps. But the bottom line is right now there's only one particular technology, one particular Bitcoin that actually works right now, and that's this one that we have, right? So it could be the case down the road. So in the next 180 days, 365 days, we would expect a very nice level of appreciation, as has occurred in previous Bitcoin mining. Why? Again, it's simply a matter of supply and demand. You have a finite amount of supply and a larger and larger and larger, a growing amount of demand. As more and more institutions get on board, as more and more companies get on board, as more and more ETFs get on board, what does that do? Well, that increases the amount of people who actually want to own Bitcoin. But you only have the 21 million supply. So you have a supply and demand imbalance here. And that's what we're waiting on here. So we're continuing to accumulate Bitcoin at these prices in anticipation of higher prices in the future, okay? Now, for Bitcoin, the maximum we're going to go to is about, a little over 3%. We're not going to go, it's not a huge amount, because at the end of the day, it's not a company. It's not a company that actually makes money. Here is our current exposure. Alphabet. We're a little bit underweight in Alphabet. We're a little bit underweight in Amazon. We're a little underweight on Microsoft. A little bit overweight on Microsoft. A little bit overweight on Tesla. And the reason is because these are companies that we believe in more. And Tesla actually worked out really, really well for us. What happened? We were overweight. You had a really, really nice pop today, mainly because of full self-drive and what that means for the future, because that's the real future. The future is going to, the reason we bought Tesla is not because we didn't buy it because it's a car manufacturer. We bought it because it's going to be a vehicle that drives around by itself, and the software is where all the money is. Microsoft, largest company in the world. Where are they going to benefit from cloud computing? So we have a really good position in a lot of these companies at this point in time. But we're not going to go super heavy into Bitcoin, guys. It'll always be around this 3% number. It's never going to be around 10% or 9% or 14% or whatever it may be. It's not going to be a super high number. Why? Because it doesn't actually make money. It is a hedge against what is happening around the world. And that hedge is money printing and inflation, amongst other things. It's a great medium of transaction as well. So here's our holdings right now.
I would add to that. It also is at kind of the top end of this risk curve as well. And this portfolio is specifically designed to take on risk, right? So, and take on risk in exciting new industries, because that is oftentimes where the risk is. And why is that the case? Because those exciting new industries, like AI, like self-driving, like EVs, like Bitcoin, and like non-fiat currencies, those are the companies and the industries that don't have a 50, 100-year track record, like a company like Coke, or a bank, or a bank, right? So that's why we have this in this portfolio, is because we want to get exposure to this, right? Is it going to act as a hedge sometimes? Yes, it is. Is it going to be a more risky position in terms of like what we can expect price variability to be? Yes. And you can see that after each halving of the several halvings that have taken place over the course of a number of years, you've seen what the price performance has been, right? So we believe it's not such a bad idea to have a space for it in the portfolio. Oh, and next to other exciting companies in exciting industries, right? Love it or hate it, Tesla has been an exciting ride, up and down and up and down, and now a little bit up, a good chunk up, right? And I heard one analyst say about a month ago, if you think Tesla is a car company, you shouldn't buy the stock. And I would actually tend to agree with him, right? And we saw a little bit of the proof of the pudding there yesterday after hours. If you didn't check out the earnings call, I would highly suggest it's a good listen there, right? But again, these are our holdings, and these are, we are abiding by what we're seeing here in our kind of investment thesis. One is concentrated portfolios. We have, there's research that will be done constantly on each of these positions. and you are receiving, for those who are members, that you are receiving those research reports, and we're monitoring these literally daily, and trading within the realms of the portfolio mandate. Now, one thing to notice that the current exposure equals 100%. Okay, that means that there's no margin on this account, right? So we're very comfortable with this, and we have
there is no margin whatsoever
no margin on this account. Yes, we have cash secured every position here. So if tomorrow, the financial world comes to an end and devastating things happen in this industry, then everything is paid for. There is no margin. But yet we are in more kind of exciting industries here. So I just want to mention that before we go on to the next slide. Sorry, Omar, for interrupting, but yeah, I thought it was worthwhile mentioning those items.
No, I appreciate that, Matthew. So our biggest exposures is really Microsoft and Tesla. Microsoft is a behemoth of a company that continues to churn out profits year after year after year, and we're really excited about what they're going to do on the AI front. Tesla is not a car company. As we saw from their earnings report yesterday, it is essentially an AI company. I can tell you, I've used the full self-driving software package myself. I use it every day. It is mind-bogglingly good. And one day, soon enough, it will be the norm. We will not have human drivers on the road. We will have autonomous drivers on the road. Because why? Because it's simply safer. So we accumulate positions while they are cheap, okay? We have AMD, we have Meta, which just reported a while ago after hours. And the stock's actually down quite a bit. It's down about 12%, but that's good for us because we were able to accumulate some shares fairly cheap today. And we still have a lot more room that we can write on Meta. Eli Lilly, as David says, there is an insatiable appetite for fat loss drugs, and that's what Eli Lilly specializes in. TSM, Taiwan Semiconductor. Somebody has to make all these chips. NVIDIA, we are nicely exposed to right now. NVIDIA fluctuates in price. We have a little bit of ownership right now, but we're waiting hopefully for it to come down a little bit more. Airbnb, Bitcoin, like I said, and then Netflix. And why are we going to Netflix? Well, the Netflix thing is simple. Netflix is going to be a major benefactor if they decide to do live events like the Mike Tyson fight against, Jake Paul. It's a big deal. It creates a lot of hype. It creates a lot of awareness, and people are going to subscribe. So we think our portfolio is really well positioned. So how have we done so far on the portfolio? So here exactly is the fund details. Okay. We've got about 99% of exposure to the different positions. Okay, which means we've written either 99% of puts or we own a certain amount. So 67% is what we own, and 99% is what we would own if not one more dollar comes in tomorrow. The good thing with us is a lot more money is coming in. We had a bunch of money coming in this week, and these numbers will go down. So we will continue to accumulate. We're also writing some covered calls. We're at the position right now where you're getting towards May 5th. May 5th is the end of the seasonally favorable period of time. We're at the end of the favorable period of time seasonality-wise. We're going to write more and more covered calls. So we have a lot of covered calls written, 19. We've collected about 4.3% in premiums, okay? So that doesn't mean necessarily that stock has gone down because, like, for example, Tesla has gone down 40% for the year, but this is exactly what you want to be doing. You want to be accumulating position. Luckily, it's bounced back very, very nicely today, so it's not down any 40% anymore. We've collected a lot in premium. We will continue to collect premium, continue to get ourselves into these positions, and to be prudent. So it's a bit of a balancing act. When you first start a portfolio like this, you have a lot of money coming in. So you have to allocate that money, but you also have to take into account what seasonality, right? You know that it's coming to an end. You know the summer months are not great. So you have to watch yourself and be careful not to accumulate too big a position. So collecting 4.3% for us, I'm quite happy about that. That's a really nice amount of money that we've collected. We're going to keep collecting those premiums, and we're going to try to get into these positions, because ultimately what you really make money off of is not premiums. What you make money off of is owning positions long term. And that's exactly what we're doing right now.
Yeah,
So
and I will say this about premiums. Like the reason you receive a premium is because you've written an option,
yeah,
right? And there's a lot of empirical evidence to say writing options is generally a good idea. Buying options, not so much. And that's one of the tenets we stand by. So the combination, we think is a very good one, because you're writing options on stocks you want to own at prices you want to own them at. And sometimes those prices are lower or higher. But again, we will only write it at stocks like Omar and I discuss this almost every day. And it's like, okay, do you feel comfortable at a certain level? Like, what does research say? What is the news that's coming out? What do the technical levels look like? And certainly no chasing trades here. On the educational front, we're certainly not advocates of chasing trades, and we don't really do that. So I think if it's 4.3% and the market has been like a little so this month, hasn't it? Right?
Yeah, I think it's been a lot so because you
yeah, down
literally have
7%. The
7%.
Nasdaq, isn't it? I think depending on the time frame you
The
pick.
Nasdaq hasn't done anything for the last 2 months.
Yeah, so this is a good time to accumulate, and if the investment thesis on these stocks are good, which we believe they are, then good things maybe in the future. So quite happy there.
I'm looking it up right now, Matthew. So the Nasdaq has done really well since October 27th. However, if I go back all the way to January 21st, the Nasdaq is actually negative since that date. Right? So yeah, the year might look like it's doing really good. But essentially from January 21st until now, you've had no return on the Nasdaq. None. So the best thing to do is what? Collect premium. That's exactly what we're doing. We are continuing to collect premium. Now, the main reason for that is the stock market was anticipating interest rate cuts into this year. It doesn't look like that's going to happen in the same degree that we thought initially. You thought a lot of rate cuts are going to come. They're not. Interest rates remain elevated. The economy remains a little bit stronger than anticipated. And these interest rate cuts are on the back burner, particularly in the United States, less so in Canada. So what happens? You may get some rate cuts in Canada, which will be great for the stock market. But the US, we were expecting rate cuts by now, right? By spring. We haven't got any. And yet we've still continued to collect a fair bit of money in terms of how much capital we're collecting. This is a great thing about writing puts and calls. You're collecting money regardless of what happens. So like I said, since the middle of January to now, the Nasdaq is actually down a fair bit. In fact, it's down a decent amount, but we still collect premium. Okay, our average days to duration is 23 days. You want to keep it nice and short because May 5th is right around the corner. Okay, so May tends to be like a volatile month, and like I said, May 5th, that's the date. Rate cuts are coming. We don't know when. And they may be delayed even further. If they're delayed even further, the stock market will take note of that. It'll discount the market. And then the last thing is the US elections that are on the horizon. Let's see who wins here. But for now, it looks like the incumbent is not in a good spot, meaning Mr. Biden. The stock market is going to look a lot more favorably upon a Republican president than it will a Democratic president, okay? Here is our contact information, guys. We will continue to be in touch with everyone in regards to your investments here. Can't thank you enough. We are now approaching, we're going to be over $5 million of assets pretty soon. And there's a lot more in the pipeline in terms of just paperwork getting done. So we're in a really good spot, and we keep accumulating here. We keep adding assets. We keep adding assets. We keep adding assets. Now, I'd like to accumulate these assets at a lower level than they currently are, but that's a matter of the market, right? So if you need to get a hold of myself or Matthew, please do so. Here's our contact information. Here's the obligatory disclaimer as always, and I will open it up to a couple of questions here. Wasim says, fun fact,